Yes, I was fortunate enough to be invited to be on CNBC Squawk Box to discuss the topic of algorithmic trading and kind of specifically how do retail investors, the way they put it was how do retail investors avoid being trampled by the large programmatic traders. The simple answer that I wanted to give that I really can't give there, but I can give here is one good way is use the algorithms that are available to you on Trader Workstation. Trade with IBKR. I did allude to that in the interview. But one of the things that I want to say is don't fear the algorithms. What algorithms really do is they allow more efficiency. Basically, what's going on is the same sort of thing that's always happened, just faster. We've learned how to harness the power of computers, the power of big data, and turn those into programmatic trading strategies. So when you hear about the machines, this is always the new thing is always something that people get a little nervous about. For a while it was the electronic trading, and now it's almost unimaginable for most trading not to be conducted electronically rather than face to face. This is all progress, and with progress comes winners and losers, and obviously the people who are a little bit left behind tend to get a bit angry at it. But you shouldn't really fear the idea of machine-based trading. Yes, what it means is there will be certain groups who are loaded with money, brain power, computing power, that will be able to interpret information, interpret market situations really quickly and really efficiently. We basically, almost all market news, almost all the verbal news is being processed through natural language processors that then turn that language processing into trading strategies. And the other thing to remember also is just because it's being done faster and more efficiently doesn't mean they don't make mistakes either. We could hopefully set up a program to read natural language faster and basically say, all right, every time the president tweets about XYZ, we're going to buy it or sell it or whatever. But the problem is there's nuances in there that get lost. Or there's different market types of algorithms that sort of follow what we're going to call a lead. Every time the bond market ticks in one direction or another, we're going to buy or sell it. And those work until they kind of stop, because ultimately you still have people pulling the trigger, and there's still asset allocations that go on. And the other thing is let's call it, rather than thinking about it as an electronic market, I'm going to call it almost a cyborg market, where you have smart individuals making decisions. How do you want your portfolio to look? How do you want your asset allocation to look? And then what you do is you're going to implement that through machines. If you want to move an entire portfolio of securities, let's say you want to move out of the S&P 500 into the Russell 2000, you don't want to be placing the number of orders necessary to do that. What you're going to do is you're going to have a computer program to tell you what your reallocation will be, and then you're going to execute it algorithmically. So don't fear the algorithmic trading. We're going to get into it a lot more. The fact that you're watching this here at Interactive Brokers means that you are better equipped than most to be dealing with this, and we'll continue on the topic in future videos.